The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days. And 877-927-6648 is the number to call. And thank you to Steve and Tom for great shows. We've got shows going on all day. And Nick Cohen Page will be here talking about health. So straight after my show, Living a Primal Lifestyle. And let's go straight to the numbers. Dow's down 62 after a horrible day, over 300 points down yesterday in a sell mode, and I think I'm about to get a sell signal in the weekly that might, in fact, in one day become a sell mode. We'll see. The day's young. So the Dow's down 60 at 16,503. The S&P's down 4.5, a little bit better. It's only down 0.24% instead of the Dow's 0.35%. At 1926, you've got the comp index. Let me just find it right here. Comp index is, in fact, at this particular point down 20 at 43.50. Gold is actually doing quite nicely today. It's up $13 at 1296.30 within a consolidation after that larger move that it had up until a couple of weeks ago. So at the JLD's at 124.60, up 121. Silver is up 0.06 at 20.48. High-grade copper is stuck in the 3.2 area. Holding there is good. Pulling back under 3 will not be very good. And the dollar is, in fact, down. How about that? The dollar down. Let me just click on this. Dollar DXY. This is the currency's index, the dollar index. And look at this. It made a high yesterday of 81.57. The day's high today is 81.54. There might be a Chapman wave two-bar reversal. We'll be looking at that in detail here based on the 120-minute chart, because it's important that we monitor the dollar because it's been acting beautifully up until now, and maybe it just needs a bit of a rest. Yes. So leg B in the weekly chart, quite a strong candle up until yesterday's close in the July contract. No, sorry, in the July month. And what's very important about this is that you've got a rectangle formation in the 120-minute chart that is starting to break the lows. And that tells me the dollar at 81.30 could pull back to around about, 81.10. That'll be important support, 20 cents lower. But if it breaks that, be prepared to see the dollar test 81 to 80.60. After such a big move, you can expect that 80.43 is a 200-period exponential moving average support in the weekly chart, and the Euro, EUR, USD, and I'm going to get to bonds in a moment because that is very important. The euro is now strongly up in leg B in the 120-minute chart. This is so interesting. Look, the daily, let me expand this chart so you can see. It ran below this is the euro-dollar currency pair. The 5th of June, the low is 1.350. It runs up and it gets to the 1.360s, and then it comes back down under the 200-period moving average. That's that pinkish line right there if you're looking at Tiger TV. And if you're looking at Tiger TV, you'll see that it took out that low, that candle. That's a Chapman wave Roman candle. It's actually a positive one. It says that you should have a rally to the upside, but be careful if you come back down because you could break the wick low. That's that little shadow bar right there. And it does that. It does that on a closing basis on the 22nd of July, and it continues down until, this is the daily chart, so it was 3 days ago on Wednesday. It makes it at 1.336, and now it's testing the 9-period exponential moving average. Good action. As I say, I think the dollar is going to consolidate. Now, this is going to be very important for us. Bonds. The continuous contract has done so well in the monthly chart, And it's amazing how just a couple of trend lines, in my CD introducing the Chapman wave methodology, I talk about these trend lines and I show the power of a trend line. And you can just go to the front page, introducing the Chapman wave methodology by Basil Chapman, chart analysis in the stock market. And then you just type in, you go to the different ways of doing it. I usually, if I'm looking for something, I go to edit, find, and then I just type in channels, and you'll see something here. Let's see what happens, and we'll click on there, click on there, click on there, and there it is. This is slide 39, and what it shows you is that sometimes there are repeated characteristics, and they are emphasized by trend lines. A trend line is a straight line moving horizontally or diagonally, and a channel is a parallel line to that. You can get expanding trend lines, where it looks like a cone formation, and it expands outward or inward, and then it becomes an apex that you're looking for, a breakout from that point. But in this particular case, there's a thick red line at the top, a dashed red line just a little below, and that dashed line I call an inside track. And these inside tracks give buy and sell zones. And on the base, when it was coming down, you'll see that there was a buy zone. So if you use those trend lines, it gives you a really good, in just one simple, direct, pinpointed move. It says, at this point, this point, this point, this point, there were reversals. Will it happen again? Well, what happened to the Dow, let me show you this chart, just for an example. In the Dow longer term, intermediate term chart, oh, I took it away this morning, what a pity. There was a trend line that kept going straight up, and it was just beautiful support until the candle of the 28th of July, and it broke it. I wanted to clean up the chart today, so I took it out. Here's the top part of this. Let me just show you something here, right there. So you see trend lines, look how beautifully it pinpoints that 16,703 low in the Dow, then round about the 16,746s down, and then the higher low at 16,800, and then it gets broken to the downside. And that's very important. Here's another technique that I use in the Chapman wave methodology. It's called the Chapman wave inside wedge. See this pink dashed line? And you see this left side, right side, what I call the price time match. From a significant left side low bar, in this case, it's the May 20th, 16,341 level in the Dow, which goes to a midpoint. I've chosen the midpoint right here. I've chosen this candle, and because it's a very small candle, indecision type candle. And then on the way down, I said, if this meets the criteria that I'm notating, one of the reasons why, for my opening call subscribers, we have been short the sentiment indexes as well as the Dow. One of the reasons is there's a target, left side, right side price time match, which says by the 7th of August, so that's early next week, midweek, there should be a test of the 16,341 level. Now let's go back to the chart we were looking at. This is bonds. Here's your up channel. There's your inside track resistance that repelled the price. Here's your inside track support level that has contained the price. Now this is a continuous contract, which means it gets smoothed out from the futures contracts. And as a result, I use it for the defining purposes of looking at the longer-term trends. If you were trading, you'd obviously use the futures contract itself. But the turning point's almost always exactly the same. The price points change because, as I say, it gets smoothed out. Look how beautifully bonds have held. They did it early in July of 2009 into the breakout of July, a year later, of 2011. See that whole containment area? Pops up once, comes back in, holds it. Look what we've done now. It's the same containment area. From the low bar of March of 2013, we have remained in this slightly rising, higher highs and higher lows, inside track support level. If this continues, and a stochastic, which is in the monthly chart at 71%, good, but not great. And the MACD, which is trying to break upside and is just flattened out slightly above the 9-period differential. That's the green line there, is above it. So far, that is positive action. But you would think, if I said to you, look, bonds have gone from under 20% in the stochastic to 71%, where do you think bonds would be? I'm pretty sure you would say they should be more than 124 to 120 to 139. So that is, what is that, 15 points? About 11%. I would have thought it would be even more based on the way bonds usually move to the upside. So what this is saying is bonds are kind of trapped in a range. Therefore, yields are kind of trapped in a range, at least for now. And the way I'm looking at it, we'll see if we're going to get a leg D in bonds, because if the 134 and 11/32 high is taken out any time in August, we're in August already, can you believe it? 136 and 25/32. No, 137.30. Yes, let me say that again. I'm sorry. 139 and 3/32 for July, and so far 137 and 30/32 for August. If it does it this month, it extends leg C. If it does it next month, it goes to leg D. You've got to be a bit careful. Most importantly, I'm suspicious of this. I think there's going to be a U-turn at some point. I don't know when. So all I can say is bonds are acting very well so far. This is leg E in the weekly chart. E is where you get a little bit cautious. It's at the midpoint in the channel, and that's the resistance level. Not a W. I meant to type in an E. There it goes. E. There we go. E it is. And the daily chart, and this is going to be really interesting, has made a peak D. If I use a phantom peak, but rather let me go to the TLT, and they made a real D, and it's pulling back, but it's holding, and it's really holding well. Look at this. This is the 50. Yep, this is the 50-period exponential moving average, right on it today, and then it bounces up. This is very good action, but not good enough. It needs to get over 115 by Monday or Tuesday. As the market turns down, I'll talk about the market now. We're about to go to a break very soon, so let me do this. We spoke about yesterday and the day before. No, yesterday I wasn't here. Yesterday, the day before and the day before that, I've been talking very much about the volatility index. One of the reasons why we've been pushing closer to the more to the short side has been because there is the volatility index. It's worth spending a whole segment on this volatility index. You know what? I'm going to do that because it is so important. There's a chance that today, for the very first time, when I was interviewed by Tom yesterday, I spoke about this and I said how the volatility index, the VIX, closes today. It's going to be really important because it could be the first week in a very long time that it's going to close above the 9-period exponential, the 200-period exponential moving average. It hasn't done that since the week of 28th of December, 2012. Very interesting. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's down 75, S&P's down 7.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to his subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. Basil Chapman, Tiger Technicians out. Dallas down 56. S&P's down 5. First day of August. Oh, can't believe it. 2/3 of the summer's gone already. That's so depressing. I haven't even had the last 2 weeks. I've been just so busy. I've barely played tennis, but I did yesterday, and that was a lot of fun. So, and you know, while I'm playing, I'm often thinking of the market because there's something in rugby that's called the drop kick. And what happens is, you drop the ball, and as you drop the ball, it hits the ground, and as it hits the ground, bam, you kick it. And that creates a tremendous force. And I often like to think that in the Chapman methodology, very often we really attempt and we try our best to get the low and just to take it as far as we can. And we were lucky. We did get the volatility index near the lows. And in fact, it's right now, the VIX is trading at 16.85, down 10 cents. And I had said to my subscribers early this morning at about 6:30, 6:45, I sent out a note saying, it behooves you to maybe take a little profit off right now. We're going to keep the core position, but just to take something off to reward yourself. Just take it off. A 30% gain on the VIX and the XIV, which is what we bought the other day, almost at the top. We sold it at 38.05. Whoops, this time. No, we shorted it at 44.90. The all-time high is at 47.66, 3 points off the top, less than that. And it went down this morning to 38.14, and I had said at 38.06, I think it was. Take something off. This is the VS Inverse VIX short-term. So, not everybody can get the shares, but if you're able to short it, it's great. And this should now start to lose premium, just like the VIX kept losing premium every time the market was either unchanged or up. And this is a great vehicle. So now let's go to this. So the XIV is pulling back sharply, and I'm almost certain that this is, in fact, a peak F. So far, it has no characteristic of a peak C. It has more the characteristic of a peak F, the 6th highest peak in the Chapman wave methodology. And in the monthly chart, I wanted to spend a little time on this. So let me start explaining it. The way bottoms are made, you start off with the short term. So the 120-minute gives you your turning point. Then the daily gives you kind of the rudder to say, I'm now changing direction, but I'm going to leave a little emphasis. The momentum has to come my way as well. It's all very well turning the rudder, but you need the engine. You need the kind of turbocharge to be able to get that turn, to make the position change. And then once it's locked in position, it stays in position. So buy signals go to buy modes. And buy modes end with a sell signal. And sometimes it won't go to a sell mode. It could recycle. A bunch of things can happen. So this is a very important reason why I'm saying the first day of the month, whenever we get a major sell-off, doesn't happen often, but whenever it used to happen fairly often over a period of a year, a major sell-off in a more intermediate term time frame, and in this case it would be the time frame of the monthly chart, you're not going to get that until the 120-minute chart changes, the daily changes, and then the weekly finally goes from a sell signal to a sell mode, and then finally that monthly, which might have dropped quite a lot, because you've got a whole month from the first day to the last day to look at the bar. If any time in August, by 1 penny, if there's a new recovery high, or all-time high in this case for the Dow, that just recycles. That just says, hey, there's strength. There's still strength here. But if, on the other hand, you go from the day before the new month, or maybe 2 days, or if you're looking at a weekly chart, sometime during that week, you go to a high, and then you crash down to the bottom of the range, you're starting off the following week like Monday, or in this case, like today in the monthly chart, you're starting off the month at a much lower level, and that's what's happened here. We've got 47.66 as so far the all-time high in this inverse VIX short-term ETN. And look, the MACD is still good. Stochastic is still at 87%. That's good. But that monthly inverted V shape, it says if this breaks and closes under 36.01 in August, that is almost certainly going to be a peak E. And so far, everything about this, got to wait for the end of the day, 4 o'clock, anything can happen in this market. So far, it does look like this has all the characteristics of a peak F at this particular point. Here's the other thing. We're going to the volatility index itself. Look at that break to the upside. Look at the power of that scoop to the upside after a rally attempt that fails with a lower low, rally attempt that fails there and goes to a lower low. Now we've got this big spike. I'll be back to talk a little more about the VIX straight after this break. Basil Chapman, Tiger Technicians Hour.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Just real quickly, I had a question in the den about 3D Systems core trading at 47.70 down 243. Looks ugly. It's going really at this particular point. If it takes out 48.10, which was the low, yep, it's done that already. 48.10 was the low on the 5th of June. Then the next level of support will be 45.42. It is a peak D in the daily, and it's got an overlapping wave. So a bunch of things that are going on here point to negative activity, and a huge Eiffel Tower type look to it in the weekly chart and the monthly chart, having made a peak E right at the 97.28 level. This is almost cut in half. It doesn't look good at all. Let's go to our first caller. We've got Mike in Thailand. Hi, Mike. How are you?
Okay, Basil, how are you?
I'm well. You're not trading Apple?
No, I don't bother with that stuff. I don't understand enough of it. I've been trading TZA.
Excellent.
And, yeah, there's been, you seem to be the VIX man, so I wanted to ask the VIX man a few thoughts I've had, and I've thought about this for years, a long time. I got a little data here I'd like to throw your way. And
Fire
I'd
away.
like your constructive criticism here or destructive, whatever I'm doing right or wrong here.
Okay, let's hear it.
Here's what I've been doing, Basil. You know that day. Let me go back here. You remember July? We had July 14th, 15th, 16th.
17th.
Remember July
17th.
You're right. Yeah. You see how we shot up? Then all of a sudden, everything just, we shot up. The market really sold off. But
we
then
went to
we shot up there. What?
Right, we went to 15.38, and within 4 days we were back down at 11.41.
Yeah, so by it shooting up like that, it was like it was a sell signal. So
okay.
Here's what I've been doing. I got some dates here historically since the all-time high in the VIX, according to my records, is October 24th, 2008, hit 89.53.
Hold on a second. 89.53, the bank crisis high of October of 2008. It went to a leg D, and then it made a peak D in the Chapman wave. Remember the Chapman wave? We always like to look for Ds, even if it's something like the VIX index. And then it plummeted from 89.53. And this is the thing that fools so many people. When it came down in 2012, 2013, 2014, and even this year, and even into this year, it's been stuck in this range under the 200-period exponential moving average in the monthly chart. But I'm going to leap ahead to try to anticipate your question. I don't know if you used the MACD or the slow stochastic at all in your analysis. But if you don't. Well, if you looked at 10.73, the low of the 6th of June of 2014, you will see that the MACD, the moving average convergence divergence, and the slow stochastic both of them have been steadily making higher highs and higher lows, even though the stochastic even though the VIX kept popping up and being repelled at the 200-period moving average, except for yesterday and today. And what we're looking, I don't think, is a climactic move in the VIX, even short term. Reason being, this is the first time you've seen how the Dow, the S&P, and the futures today had 19, almost at 8 level, 1913, I think it was, for the E-minis, and we've come all the way back. Been all the way to 1930. That is a huge move, and yet the volatility index is still hanging real good at this particular point. So, next point that you'd like, I just want to cover some of the things you're talking about. Then you've got some other points?
Yeah, well, I'm not so sure if you know what I am going to talk about. What I'd like to ask you.
Okay.
I'm not enough. I've been becoming more and more interested in your work, listening to your show and everything. And,
Thank you.
Not to mention a whole Tiger team you have out there. I don't know how you guys do it, but you guys are loaded with passion in what
it's a wonderful team. It really is a wonderful team.
So when you say you're playing tennis or whatever you were doing, you said, I was thinking about the stock market or the VIX. I wasn't surprised. You probably do it, when you're gardening or whatever.
Right, you're right.
So anyway, here's what I got. Here's what I have, Basil. Can I run these things by you? I don't know if I'm going to make enough sense because I don't know if we have enough time.
All right, let me do this. Why don't you go right through your salient points, and I'll write them down. Just in case, I'd like to hear them all rather than to interrupt you. So you just fire away. The floor is yours.
Okay. All right. Thank you. All right. Now, what I like to do is I use the mid, high, and low of VIXs. Do you see? So my first one I have, now I don't know if I'm making any sense, so just interrupt me, interject, and then I'll be glad to try to elaborate a little more.
I just want to know, are you using the daily?
I use I'm going down. I'm using daily, and I'm going back. I'm going back to, for the whole history of the VIX ever since it started out. Okay?
Oh, that's fine. Okay.
Okay. Now here's what we got. So I use mid, high, low. I took the October 24th, 2008 all-time high of 89.53. I subtracted the February 14th, 2007 all-time low of 9.7, right?
Yep. Okay.
I then divided that by 2, right?
Okay.
To get my halfway point.
Right.
And what I've been doing, my whole point here is I get halfway points, and so that's the longest one. So if we hit right now, that stands at 49.62 as of for a while now. Okay.
All right.
So we're nowhere near there. We're almost 200% away. We're 195% away from that right now. I'll be glad to email you this part. I use this on the spreadsheet. But
yeah,
anyway,
I'd actually like to look at it if you don't mind emailing it. I'd like to look at it. And there are a couple of things I just wanted to make points of. The volatility index, what you're doing, I think, sounds to me very feasible. Now, someone like Dave White is probably the person to be speaking to in terms of how to use it correctly, because there would be some slippage somewhere along the line. But I think what you're doing is good. The only difference I'm going to make it as a very, very big point is that the time, if you use time and you say it's been underneath 15, and you will come up with a huge number for those very rare times that it spikes to the highs. So that's why I like to call it buying pressure and selling pressure rather than fear and greed, because absolutely the fear factor, there's just not even a question that when it gets up into the highs, that's fear. When it gets to the 21 area, we're going to find that's
right,
fear.
Yeah.
Right.
I want to give you a better overview here of what I'm trying to explain, because I want to try to do a better job in elaborating here. I wish I would have written some points down so listen, I can explain better.
Mike, this is what I think. What I would like you to do, because I'd like to be able to put your chart up together with mine, and have you elaborate a little bit more, because it's hard for people to visually picture what's going on. So if I can, for Tiger TV, it'll be wonderful. I think a lot of people would appreciate it. Could you, over the weekend, or as soon as you got time, you don't have to rush, send me whatever you have. Let me look at it.
I totally agree with you. And I will try to get to that this weekend. But here's the bottom line.
Okay.
I know we've seen a lot of massive destruction in this market, but you want to know something? I don't think we're going to see the final top in this market, and I think it's going to happen this year. I don't think we're going to see that final top until we hit that all-time low of 9.7. Until that's taken out, that's going to want to get tested. All right.
So let me add to what you're saying. Number one, I kind of agree with you. Even though I've got a lot of charts that are E's and F's right now, I'm in the camp that says this should not be the top. This should be a pretty serious top for certain sectors and certain stocks. But that I have to now set aside and then say to you, I would not be surprised if in the next phase the market does go to all-time highs. But this is the point where we might see that the VIX actually doesn't go down to those lows. I don't know. I'm just saying, I'm throwing it out as a possibility, because it depends where it comes from when we make our climactic low, which I believe we'll make maybe in 6 weeks' time. I don't know when it'll be. I do have some time frames, but in the meantime, your premise, I think, is correct. You and I have absolutely no idea if it will make new all-time lows. Probably if the Dow makes all-time highs, the S&P and the New York Stock Exchange and the Dow, then you will get the VIX at least close, if not to all-time lows in the 9s. But most importantly, I think that how the transports and how the bonds and how the dollar acts and how the volatility acts and how the market treats all news from now on into the end of August, sometime mid-September, is going to be really important. That's why the VIX, people have dismissed the VIX recently. I even heard people talking about it as if that's it, we're done with the VIX. And I'm saying to myself, no, human emotion never changes. It'll never change. The VIX will always have a place. They might calculate it differently, but it'll always be something like the VIX. So how about that, Mike? Send me something. Maybe this time, Friday's my technical Friday. Maybe a week from today, we'll be able to get a little bit more into it because we've got our positions. I think that the VIX is going to be going higher. I think you do too. But later on, we'll see when it changes. Is that okay?
And right, yeah, totally. But let me just add a few words here.
Sure.
I think if you look at that chart, it looks like the thing's right at the top, the VIX right now. You know what I mean? Because it makes it perfect. It makes it perfect. If you take the June 16th high, right?
Right.
And then you draw an upper trend line, right?
Yep.
A diagonally rising trend line. Then you take, let me see, the 14th, 15th, 16th, 17th, like you said before. You connect that. You go from 1289, you got 1538, and then you draw those, right? It lines up beautifully. And what caught my attention is I heard you say the other day, this is before the VIX took that big rise, you said it was going to go to 17 something. Well, we're there now, and we're hitting the top of that channel.
I've drawn it in. I've drawn it in so that people looking at live TV right now can see that it has gone right to it. In fact, it's a little bit above it, but that trend line is very important. Not only that, I had a left side, right side price time match to the last one at 1538. That's why I think this is so. That's why I say to my subscribers, you've got to keep your positions in the VIX. Just take something off to reward yourself a little bit this morning, and I think that that's the way you're going to handle it because it's going to be very hard to get such a great entry point again in the volatility index or the inversion, the XIV. So, hey, Mike, thank you so much for calling. I'm looking forward to getting the email from you. Have a great weekend.
Thank you. You too, Basil. Take care. Bye.
Thank you very much. So, folks, let's just do a couple of things here. The 120-minute chart in the VIX is an alternate wave count at F. Is it F or is it B? My thinking, as I said to subscribers this morning, if it holds very well, it's B, because if it pulls back in the 120-minute chart and now goes to 17.12, 1712, that'll start leg C. If it happens this afternoon, we could get a really ugly close after yesterday. To get an ugly close today, that would be very... You remember I've been talking all week and I've been saying... the manner in which every single day the market has acted and reacted, the way the futures were up and then they closed down, the way sentiment was turning and it made people look like absolute fools if they went short when the market kept coming back and then it would close towards the low of the day, and we had those failures. That said to me, this has all the signs of a climactic churning or some kind of filtering by fund managers to be able to distribute their stock in a very quiet and subtle way. And that said to me, the only way either we're going to go down slowly, higher highs and higher lower highs and lower lows, lower highs, lower lows, or it has to be a smash to the downside to give nobody a chance that got in the last couple of weeks. And a lot of people, I just felt it, that there were a lot of people getting into the market. So I think this has got all the characteristics of the bear phase, at least in the shorter term, in the daily chart. Haven't yet committed because I have to wait for Friday at 4 o'clock to see what the weekly chart is doing. And then I'm going to come back and talk. Robert in Chicago went to look at Procter & Gamble. We'll do that when we get back.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been used digitally hand-drawing charts from the late 1970s into the 1980s. Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. Basil Chapman. Wow, there's so much I didn't get a chance to do. A couple of emails, a bunch of things. Let me do this because we've got a caller online. We've got Mohammed in Glendale, California. Mohammed, what are you looking at?
Hi, Basil. How are you doing?
I'm good, thank you.
Home.
I wouldn't touch Pulte Homes at this particular point. I wouldn't touch any of the home builders. Let this settle. Give it a few weeks. Let's see how Pulte Homes are trading at 17.61, down 4 cents. Let's see. because it's closing on a weekly basis underneath the left side low of 18.01 the week of the 9th of May. Well, it hasn't closed, but I don't see how it can rally from 1761 to 1801. Well, maybe it can. But in the meantime, back at the range, the weekly chart is looking ugly, and that's the monthly chart in the pattern that I call the H pattern. I don't have time to show the CD, the chapter on the H pattern, but more importantly, 1871 is the resistance. I think that you've got your eye on a stock that could have a pretty decent bounce, but it needs some time to test the whole area in the 17s, because if it does take out 17s, it could be a real quick run down to the 16s. And then I have to say, now we have to wait to see how it tests 1423, the low of August a year ago, August of 2013. I'm going to just say hold off for now, because even a bounce would be, what I'm saying is that I think that a bounce can give you a nice percentage gain, but it's going to have to be timed perfectly, and there's just no room for error. Whereas on the short side, there's room for error because the technicals are very weak, and it looks to me like it'll be going down quite a bit more. So, Mohammed, if you don't mind, do you have a position?
No, I don't have a position. Just wanted to see it.
Yeah, you know what? I'm inclined to say to you, this is not the time. Lennar is coming down very sharply. Lennar, we've got Toll Brothers. No, I'm going to say to you, the risk is just too great, and the upside potential at this particular point is very limited. So I hope that helps you, Mohammed.
Yes, indeed. Thank you so much, Basil.
Thank you so much for calling. So, folks, let's do this. I had a good question here about Goldman Sachs. Question the other day. I did it on the air. I said Goldman's having a very nice bounce. In fact, it's helping the XLF. But all of a sudden, it made this this two peaks at peak B in the daily, which looks like it wants to reverse. Now, the great question. The question is, how come we've got a peak C? Surely it should go to a D, and my answer is that if you look at the monthly chart of Goldman Sachs, GS, symbol trading down 3 at 169, if you look at this, it's made a cup formation. Oh, I don't have time to do all these different charts. Maybe on Monday I'll prepare for it. But this is the Chapman wave double top, what I call the drop bucket pattern. Be real careful, because if Goldman Sachs, instead of rallying into the 180-113 all-time high, starts to pull back and closes next week under 165, there's a real good chance it's going to test the 151 low. Be careful with Goldman Sachs. The answer is, under the previous all-time high, you can get a right shoulder failure. That's just real simple. Next question I got was, let me just lean over here. Let's see. Goldman Sachs, is this just a pullback going high? No, I'm concerned about that. Next question was the Dow. How is this weekly close different from the 411 big down week? Okay, good question. This is the weekly chart. Let's just go right there. See if we've got time to do this, because you've got Nico and Paige coming up. So INDU. Here we go. Why? How is this different from the April, that very ugly candle? The reason that this is different is I did have an alternate count, an E/B, but the very next week there was almost an engulfing candle. And it went right above the 9-period exponential moving average. This is way different. This is very much like the candle of the 24th of January, where the Dow continued down from 16,588 to 15,340. So that's 1,200 points. This is a pretty ugly candle, and it could be repeated next week. And we're breaking this kind of key support over here. So I hope that helps you, folks. Stay tuned, Nico and Paige. Check out my work. It's the opening call. Go to the front page of This is a perfect time to get 2 weeks free. I'll be back on Monday. Have a great weekend.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.